হ্যালো ভিউয়ার্স, ওয়েলকাম ব্যাক টু মাই চ্যানেল। আপনারা দেখছেন Cybertalk ইউটিউব চ্যানেল। সাথে আপনাদের হোস্ট আমি আছি রেমান। আজকে আমরা আলোচনা করব চুজিং এ মর্টগেজ দ্যাট ইজ রাইট ফর ইউ। ওয়েবসাইটটি হচ্ছে condo.ca। তো ভিডিওটি শুরু করার আগে চ্যানেল যদি নতুন হয়ে থাকেন অবশ্যই চ্যানেলটি সাবস্ক্রাইব করে পাশে থাকা বেল আইকনটি ক্লিক করে দিতে পারেন পরবর্তী ভিডিও নোটিফিকেশন পাওয়ার জন্য। অলরেডি সাবস্ক্রাইব করে থাকলে আপনাকে অসংখ্য ধন্যবাদ। So choosing a mortgage that is right for you from Financial Consumer Agency of Canada. So what is mortgage? When you buy a home, you may only be able to pay for part of the purchase price. The amount you pay is a down payment to cover a remaining cost of the home purchase. You may need help from a lender. The loan you get from a lender to help pay for your home is a mortgage. A mortgage is a legal contract between you and your lender. It specifies the details of your loans and it's secured on a property like a house or a condo. With a secured loan, the lender has a legal right to take your property. They can do so if you don't respect the condition of your mortgage. That includes paying on the time and maintaining your home. Unlike most type of loan with a mortgage, is your loan is secured by a property, you may have a balance of owing at the end of your contract. You normally need to renew your contract multiple times until you finish paying your balance in full. You may have to meet qualification requirements, including passing a street test. You need a down payment. You may need to break your contract and pay a penalty. Your loan is typically for an amount in the hundreds of thousands of dollars. So, what to consider when getting a mortgage? When you shop a mortgage, your lender or mortgage broker providers you with the options. Make sure you understand the option and features. This will help you choose a mortgage that best suit your needs. The includes yours the mortgage principal amount, the amortization, payment frequency. If your lender is a friendly regulated bank, they must offer a sell your products and service that are appreciate for you based on your and financial needs. They also must tell you if they have asserted that the product or service is not appreciated for you. Take the time to describe your financial situation to ensure you get the right product. Don't hesitate to ask question and make sure you understand the mortgage you have or want. You can find information on each of these features in this section below. For more detailed information on each item, click on the link provided. Find out more about where to go, where to get a mortgage. Your term. The mortgage term is the length of time your mortgage contract is in effect. The consists of everything your mortgage contracts outline, including the interest rate. Terms can range from just a few months or to 5 years or longer. At the end of each term, you must renew your mortgage if you can pay the remaining balance in full. You will most likely require multiple terms to repay your mortgage. The length of your mortgage terms has an impact on your interest rate and the type of your interest. You can get fixed or variable. The penalties you have to pay if you break your mortgage contract before and end of your term. How soon you have to renew your mortgage agreement. So how your mortgage amount is calculated. The amount you borrow from a lender for the purchase of a home is the principal amount. The amount usually includes the purchase price of the home minus your down payment, mortgage loan, insurance if your down payment is less than 20% or if it's required by your lender. So how your mortgage payments are calculated? The mortgage lender user use factors to determine your regular payment amount. When you make a mortgage payment, your money goes toward the interest and principal. The principal is the amount you borrow from the lender to cover the cost of your home purchase. The interest is the fee you pay the lender from the for the loan. If you agree to optional mortgage insurance, the lender adds the insurance charge to your mortgage payment. So your amortization period is the length of time to take the pay of mortgage in full. The longer the amortization periods, the lower your payments will be. Keep in mind that the longer you take off your mortgage, the more you interest you have to pay. So if your down payments So if your down payment is less than 20% of the purchase price of your home, the longest amortization you are allowed 25 years. So your interest rate, the interest is the fee you pay to the lender borrowing money. The higher your interest rate, the higher your mortgage payment will be. Every time you renew your mortgage term, you renegotiate your mortgage interest rate. This means your mortgage payments can be higher or lower in the future. When you apply for a mortgage, your lender offer you an interest rate. You can renegotiate this rate to see if they can offer you a lower rate. The interest rate you a lender offers may depends on the length of your mortgage term, the type of your interest you choose, the current posted interest rate offered by your lender, your credit history, if you are self-employed, if you qualify for a discounted interest rate, the type of lender you choose, like a bank, credit union, financing company, or mortgage investment company, the specific lender. Before you commit to a lender, shop around to get the best rate for you. This could save you thousands of dollars. So the type of interest, when you apply for a mortgage, your lender may offer different interest options. So the first option is the fixed interest rate. A fixed interest rate says that same for the entire terms. They are usually higher than variable interest rate. With a fixed interest rate, your payments will stay the same for your entire time. So a variable interest rate can increase and decrease during the term. Typically, the interest rate is lower with the variable interest rate than fixed interest rate. With the variable interest rate, you can keep your payments the same for duration your term. Lender call a fixed payment with a variable interest rate. You also have the option to option an adjustable payment with variable rate. With adjustable payment, the amount of your payment will change if the rate changes. So hybrid or combination rate high interest rate. A hybrid or combination mortgage has both fixed variable interest rate. Pay off your mortgage has a fixed interest rate, and the other has variable interest rate. The fixed portion gives you partial protection in case interest rates go up. The variable portion provides the partial benefit is the rate fall. Each portion may have different terms. This means hybrid mortgage may be harder to transfer or to another lender.